And here they argue some achievements, okay, some advantages also politically is the ESG rating because of the BEV push that they have, you know what I mean? And they argue here this can be a positive. And this is also an impressive chart, I think, because it shows the stability of growth, okay? And this is the sales for every year from 2011 to 2021, from 11 billion to 33 billion. And really it shows you the strength of this company, okay? And the stability of this company, like pulling this off year after year quite stably with a 12% growth rate of your sales is, I think, impressive. Now here, the important thing I think to understand is that their growth or their sales are generated in all different regions of the world, okay? So it's not a big reliance on just one market, but obviously you can see China seems to be here the big market. Then this is basically the same things. They have also a financial services unit, but it's only a minority in their Porsche group. So the main part is here the Porsche automotive company, the car company basically. And yeah, this is just the key facts about that. And here you see how they get to the change in net liquidity. How can they increase their net liquidity, their cash so much? Okay, so you have a starting liquidity in 2019. And how do we get to a better net liquidity in 2021? Okay, and from the left side, we add the earnings basically that they have, okay, from their business. So their operations are very profitable and they produce a lot of earnings, but they need to pay taxes. They also need to pay for research and development because new models, they need to create new models. They also have a lot of new investments in machines and equipment and so on, capital expenditures, and they have some maybe provisions for pensions, and they also need to pay their shareholders, okay, distribute profits to the shareholders. But still, even after all of that, the earnings are big enough basically to cover all of those costs, pay all the shareholders, and still end up with more liquidity. This is the impressive thing, okay? Now, this is what we've seen here, pretty much. This, again, this is their targets, double digits, margins, okay, and even increase them. Now, if you want to, here's maybe some points about how to get shares, because right now there's a window open, I think, at least for retail investors to get shares. Retail investors from Germany, Austria, Switzerland, France, Spain, and Italy. You can acquire shares, but obviously from your broker, it can also be in other countries that they might offer this. So check it if you are interested in that. Here they list a couple of banks. This information is public. You just go to the Porsche Investor Relations homepage and you can find all about that, okay? Now, if we now look at a comparison of Porsche, this is the interesting part, to Ferrari and then also Tesla, and then really track the stock performances and also evaluate the fundamental data behind them, okay? Here we see the Ferrari IPO in, I don't know, what is 2015 or something like that, okay? At around about $50 or something like that. And right now the price of Ferrari is basically $200, okay? So it's a 3.x return since the IPO, and quite, you see here the characteristics. This is an important point about IPOs, and this will, to learn this is always good, even for IPOs in the future if you participate, because you see, usually if they make the IPO, you have private investors, okay, and they want to, if they go list their shares on the public markets, they want to have the highest valuation possible. So they hype the prices. You see it also in the prospectus of Porsche. They try to highlight the best of the best numbers, okay, to get a lot of interest in that IPO and to create the highest price possible, because the highest price means a lot of income for them, because the IPO is basically because you sell your shares for money. The money is from retail investors that are interested. They give you the money, but there's a lot of cash coming in through that. Okay, so it's a very profitable thing. And because of that hype, the stock price performance in the short term can, let's say, be not so great. And you see that here in the Ferrari, after the Ferrari IPO, a big seller, okay, from $50 to, I don't know, $30 or something like that. So you have to be aware of this. Can be very volatile in the short term, but you see for great companies, high quality companies with good sales, with high profit margins, with a really good brand power, that they can really get in a pure play a very good valuation, high valuation, and also high stock prices, okay? And you see the return here is quite nice. Now, if we look at Tesla, for example, it's even better. And I will explain why this actually is. I mean, you see here in 2011 IPO, okay, at, I don't know, because Tesla made a lot of stock splits and so on, it's here, I think, at $1, okay, and to consider all the stock splits. And then you have Tesla at 310 bucks, okay, so this is a 245x return, so this is pretty crazy and much higher than Ferrari, although Tesla has been public for much longer, okay, but still. And it's quite interesting to see why they can, it's one of the biggest companies in the world by market capitalization, okay. And the question is really, why is that the case? We will go into that later, but just to show you some competitors, maybe not in the European markets, like for example BMW, Daimler, and so on, they all have maybe not such a great price performance, but the sports car company like Ferrari and also Tesla, which is on the electric vehicles, you know, big push, they seem to have quite good performances. No? And if we look now at Porsche, then the question is really, okay, Porsche is also a sports car company. They also address BEV markets, a big market, and maybe they have also a good performance. You know, that's why I think it's interesting to analyze this company. And now I think this is the most interesting part of all, and this is the direct comparison of Porsche, Ferrari, and Tesla. Okay, now I've listed here market cap, assets, liabilities, equity, their revenue or sales, the after-tax profit, then the multiples. So I picked the 2021 numbers as good as I can. Okay, so the multiples are always a little bit, can be higher, lower, depending how you pick the numbers, but I think it still brings the picture out right. Multiples like price sales, price book, price earnings, then the earnings growth and the PEG ratio, okay? And then let's start with Porsche, okay? And with the market cap. So you see here the Porsche market cap, if the IPO goes through, is 73 billion. Now, Ferrari right now has a market cap of 36 billion, okay? So it's basically half. This by itself does not tell you anything, but it gives you still idea how big the company or the appreciation of the company can be in the capital markets by investors. And Tesla has a market cap of 968 billion. Okay, so almost $1 trillion, one of the largest companies in the world. Now, this is a big difference between Ferrari, Porsche, and Tesla. And then this is interesting to see. I think you can learn quite a lot just from this single chart about investing. Okay, now let's look at the assets. Okay, assets is basically the stuff they own. Okay, machines, equipment, and so on, brand power, patents, all of that. Okay, it's 51 billion for Porsche. Ferrari has basically 7 billion in assets, so much smaller. It's just a smaller company. And Tesla has 62 billion. So regarding the assets, we see, so market capitalization, we can compare Ferrari and Porsche here. Okay, regarding the assets, we see Ferrari seems to be much smaller, and Porsche and Tesla seem to be actually quite similar. Interesting. Then we have the liabilities, is basically 28 billion, 5 billion, and 30 billion. Okay, so the equity, it's basically, I would say, liabilities are roughly half, you can say, for both Porsche and Tesla, which seems healthy. And the equity is then resulting 23 billion, 2 billion, and 32 billion for Tesla. Okay, so now let's go look at the revenue, the sales. Okay, 33 billion for Porsche and 42 billion for Ferrari, and then we have 53 billion for Tesla. Okay, so Tesla seems to have an edge here in sales. They have quite big sales. Okay, and if we look at, okay, this is the first picture. Then we have the after-tax profit for Porsche for 4 billion, then 800 million for Ferrari, and 5.5 billion for Porsche. Okay, so we can see that the profit of Porsche is actually quite high in absolute terms compared to only a revenue of 33 billion. Okay, and for Tesla, we can also say, like, they have quite a high profit for the revenue they generate, but still the revenue is almost twice for Tesla but they don't generate twice the profit. So it shows you that the profit margin is really good for Porsche, I think, for Tesla as well, no question, and also for Ferrari, of course, but just something to keep in mind. Ferrari especially, I think, have high profit margins because this is a ultra luxury segment, okay, and you can demand any price basically for those types of cars, so that's why they can have this profit margin. It's not possible for any company, you know what I mean? Now, if we look at the multiples, and here's the interesting part, okay, because we never want to overpay for those share prices, even if the company is the greatest company in the world. We as investors only want one thing: make money, okay? And of course, we don't want to own low quality assets, because high quality assets always perform good, or should perform good, and low quality assets is just something you do not even want to own. You don't want to own something bad, you want to own something good of high quality. This makes sense, but we don't want to overpay. And that's why those multiples are one good way, in addition to the absolute fundamentals and the overall strategy, of course. And the multiples, you say that regarding price to sales ratio, Porsche is at a 2x multiple, Ferrari is at an 8x multiple, and Tesla is at an 18x multiple. So this, at the first glance, we would say, oh, Tesla is completely overvalued, okay? And even if you look at the price book values, 3x for Porsche, 16x for Ferrari, 30x for Tesla, similar picture. So Ferrari seems to be, regarding price sales and price book, much more higher valued than Porsche, and Tesla seems even more higher valued, almost outrageously high. Now, if we look at price earnings, 18x for Porsche, Ferrari 45x, and Tesla 176x. This sounds really crazy, okay? Then you think, oh my god, Tesla, one of the largest companies in the world, they must go down, basically. You know what I mean? It cannot be a good investment. But the devil is in the detail, and that's why you cannot just look at the relative multiples in isolation or just at one multiple. You need to consider the whole picture, and this is, I think, something that is valuable to you as investors to keep in mind. And just from that, you can say basically Porsche, regarding the multiples, seems roughly fairly valued. For Ferrari, I would almost say, regarding the multiples, looks a little bit too rich, and Tesla looks completely insane, okay? But now here's the tricky part. If you look at the growth of their earnings, because the multiples just tells you what is the share price regarding a fundamental metric of the company, okay? Now, the earnings growth tells you not only about the absolute value of earnings compared maybe to the share price, but it tells you how quickly the earnings are growing. So the speed of the growth, because obviously a company that has, let's say, a super high growth of earnings has probably a much better share price than a company that has a low earning growth. And this is not reflected in the multiples, you know. And for Porsche, this is roughly speaking here 6.4%, Ferrari 3.3%, also rough numbers, okay, it fluctuates a lot, so you cannot really tell, but I try to, let's say, average it out. And for Tesla, it's 200%. And this tells you Porsche, for example, has a very good and relatively stable earnings growth of 6%. Ferrari also has a very good earnings growth, maybe a little bit smaller over the last couple of years, okay? But Tesla has an outrageously high earnings growth. It almost seems unreal, okay? It almost looks like, hey, did you make a mistake calculating this number? But I mean, you can argue if it's lower and higher, you know what I mean? But still, it's much higher than on the left side. Now, this is a very interesting ratio that you have to keep in mind, and this is how public stocks are valued on public markets, okay? The PEG ratio tells you basically the PE earnings, the price to earnings ratio divided by the earnings growth, okay? So you have the PE of 18 and you divide the 6.4 of earnings growth, and then you have the PEG ratio of 2.8. And the PEG ratio for Ferrari is 13, for Tesla it's under 1. So basically the lower this is, the better it is, because at the top you have your price earnings multiple. You want to have as low as possible price earnings multiple, here in this case, Porsche actually has the lowest with 18x, the lowest price earnings multiple. Tesla with 176x has the highest. So this looks actually bad regarding the price, regarding the PEG ratio from the PE standpoint alone. But the earnings growth is then at the bottom. You divide then the PE by the earnings growth. And the earnings growth is actually the lowest for Ferrari, higher for Porsche, and super, super high for Tesla. And that's why the PEG ratio is super good for Tesla, below 1, good for Porsche, and maybe less good for Ferrari. Okay, and this tells you, this PEG ratio tells you, because the earnings grow so fast, although the company Tesla is on a price sales, price book, price earnings ratio, looks completely overvalued. Also, if you look at the market cap of almost $1 trillion, it looks crazy. But the thing is, they grow their earnings in a speed that is crazy. You know what I mean? And if they continue, the share price will still rise. But obviously it reflects risks on the other hand, because if they cannot keep up with that earnings growth and they need to revise the targets down, then of course the multiples will then punish basically Tesla quite quickly as well. So this can be a good thing, but also you see the risks here, okay? But just from that point of view, I think, because this video is about the Porsche IPO, you see that they have good revenue, they have good after-tax profit, and they are actually quite fairly valued, even with the price sales, price book, price earnings ratio, maybe not super low. Actually, I would prefer a little bit less, maybe half of that. So if they're maybe 73 billion in market cap, I would hope for maybe half of that capitalization. This would be actually, for myself, quite an interesting entry point. If we get that, I don't know. So far, it looks like Porsche IPO is quite hyped up, a lot of interest, and this could push the price maybe a little bit up in the short term, but then maybe down because of all the short-term effects of the cash payouts to Volkswagen and so on that we talked about in this presentation. Is maybe short-term in this year in Q1, maybe negative effects that will similarly to here, the IPO of Ferrari, maybe push also the Porsche price down, because it gets hyped up in the IPO, and then the short-term negative effects set in, and then this could be maybe quite an interesting opportunity point to acquire shares slowly. And this is what I personally will be exactly doing. I will monitor the situation and I will wait what happens after the IPO and look for basically dip down and some retracement, and then I will reassess those numbers. Then I will evaluate for myself, okay, does it make sense to enter now, yes or no? I'm sure Porsche will be a super great long-term investment, because it's a pure play of the sports car company, and you have the best fundamentals you get now in Porsche and not in, let's say, Volkswagen, which has a lot of other brands which are not so profitable. And here you can own it purely, you know. And with those types of numbers, revenue, stable growth, also in the earnings, you know, also the cost cutting, the strategy, you know, I see a lot of potential, and it's not a pure sports car company that can branch out even more in the mainstream and get market share from that as well. So, and the brand power is super, super strong, and getting this at a good price, you know, I think will make a great long-term investment. And long-term means for me, own this. You can easily own the thing, I think, for 5 to 10 years if you get a good entry price. And maybe just from the start out, you can, it's also maybe an attractive price, you know what I mean? But still, I have a little bit, it's more interesting for me if I have a little bit of margin of safety. That's why I look for maybe a little bit dip, a little bit of a cool down. And right now, you know, emotions are high, and that's why investors always can make not so great decisions. And I, you know, want to wait and observe, because there's always opportunities out there. Okay. But this, I think, shows you quite well how you can analyze stocks. And it's always a good thing to look at the competitors like I have here and compare them, and also observe, okay, how did they perform? What were their characteristics? Why did they perform? Try to understand this. And if you dig in the numbers, and you don't have to go into the super details. So this was actually a super short, let's say, analysis, okay? I did this thing in, I don't know, 30 minutes, 45 minutes, okay? And you don't have to do much more than that, actually, if you really understand what you're looking for and how to analyze these things. And again, I would like to urge you if you want to learn how to invest properly, check out this free video course in the link below the video. Investing Unlocked. It will teach you more about investing, also about different asset classes besides stocks. Okay, I cover cryptos, real estate, all kinds of different assets, and how to think of them and understand them better. And if you really understand this, you know, it's much easier to ignore the noise in financial markets and really focus on the important part in investing. And you don't want to do this just by, let's say, getting fun or getting a hype out of owning shares in a cool company. You know what I mean? I'm in this to make money. And this is, I think, what a lot of YouTubers out there or content creators, they cannot teach you. They can teach you about some news or some stuff, but how to actually make money from this stuff and how to really properly analyze this, I think not so many people can do that. And I hope this thing was valuable to you. And if there's some new information about Porsche IPO and some developments, I will let you know. And until next time, see you.